So welcome back, guys, to another episode of Box Mining here. Today we have a live stream and a live discussion with one of the guys with the most hats in crypto, I would say. So we got Sam Bankman-Fried. He almost needs no introduction. He runs a fund, Alameda Research, and then he's got FTX Exchange and Serum on top, and he has some great insights on the market. So Sam, welcome to the channel. Welcome.
Yeah, thanks for having me.
Nice. So, obviously today is an amazing day to start any discussion like this. We got crypto skyrocketing, shooting up to the moon. So for today's topic, we're just going to talk generally about crypto and then a little bit about FTX and everything that's going on. And we'll answer some questions from the crowd as well. So if you guys have any good questions during the stream, make sure you shoot them down. This is a live stream and Sam agreed to do a live stream. So that's the best part. So we get some live interaction. So that's great. So starting off, we got ETH to 600. ETH went past 613. That's crazy. So what's your take on your market? That's like,
it's interesting. It's sort of like the price action here is insane. It feels like, the price action looks a lot like sort of 2017 price action, where things like keep going up and one sector goes up a lot, then the next sector's turns it's large altcoins day today. That's interesting. It was Ripple day yesterday. But it feels very different in terms of where this is coming from, in that late 2017, you sort of walk down the street and you hear two people talking, you're like, man, I wonder if they're talking about Bitcoin. Probably they are, it's just massive retail interest in inflows, and it's sort of the talk of the town everywhere. Here, really a lot less retail inflows, really a lot less, a lot fewer new entrants to the space. And instead, what you're seeing is a combination of, a lot of bullishness amongst sort of people already in the space, and then sort of institutions starting to dip their toes in. People like PayPal, who are, maybe one step removed from the crypto world before this, starting to play around with crypto. And it's sort of been a combination of those two groups, and as opposed to just 30 million new customers that have been driving this, and that means it's just, a lot more concentrated where it's coming from.
That is true. So we got PayPal. That's amazing news. But do you think that's sustainable though? Sometimes I feel like we don't have enough people to justify this. Do you think that right now we can move towards a more sustainable growth in this sector?
Yeah, it's definitely a worry that we're sort of putting the cart before the horse, and we get all these institutions, not all these, but some number of institutions, it said a huge amount of growth in market cap, but that there's sort of neither massive growth in user base nor in use cases. And I think either could potentially do it, but I think you do sort of eventually maybe need one of those. Either you need just a ton of people to start deciding that this is what they're going to be investing in, or you need a ton of real businesses or high revenue businesses to start building into crypto, on top of crypto, with crypto, things like that. Somehow something has to start driving it eventually. That's not just speculation.
And I think on this point as well, it's recently we've been going and reaching new heights. Do you see more customers coming in though on your side as well? Do you see more registrations, customers, or more volume on your side?
It's a good question. So volume is way up. It's sort of this is our second week out of the last three where FTX has broken its all-time record for biggest buy and burn and basically weekly volume. So, volume-wise, it's massive. In terms of customer base, there's growth, but it's just not as drastic. It's we're not seeing the sort of thing you saw in 2017 where there's gigantic backlogs to get an account at an exchange. And so I think that while volume's been going up, it's a lot more top heavy than sort of than a few years ago.
Got it. So is that new volume? So it's kind of interesting, right? So you're saying that the volume is going up, but the number of users is not exponential. It's not hockey sticking up, but the volume is hockey sticking up. So is that a reanimation of a lot of new older accounts? What's happening there?
Yeah, I think just most people who would describe themselves as a crypto trader are just trading a lot more than they were trading 2 months ago. It's just if you look at, and this is true for quant firms, this is true for positional day traders, this is true for sort of like, month timescale investors, like across the board, volumes are just way up. And it's sort of interesting, like, why is that? Why are volumes up so much? And, I think part of it is that there's just a ton of volatility. It makes for more interesting trading. People have more opinions to express. I think part of it also, frankly, is people have more money mark to market. Like, crypto is up a lot. And so people's net worth in crypto on the whole is up another few $100 billion this month. And, that sort of means more money to play with, and more money to bet, and more money to potentially lose or win. And so I think like those are frankly also sort of contributing to higher volumes.
Got it. So that makes sense, right? So yeah, and we've been talking about that. So now a few questions. I mean, if you don't mind me asking, we got, do you want to make any bold predictions as to the price of Bitcoin or Ethereum in the end of this year? I would say.
Yeah, it's a really good question. I mean, who knows? Obviously, is sort of the answer. With Bitcoin, like, it's definitely not like, I don't know what's going to happen. It doesn't currently have momentum. Like, it had a ton of momentum driving up to around here, somewhere in the 18Ks. It's been pretty quiet since then. It's been gone up a little, gone down a little. We're not seeing sort of like massive Bitcoin inflows each day. That doesn't mean that they won't pick up again, like they could, but attention is turned to altcoins for now. And I think it could sort of go either way. When attention turns back to it, like, on the one hand, I think it's more likely to be bullish than bearish attention, like it just in general. When people sort of get bored of Ripple and Litecoin, are like, all right, time to think about Bitcoin again. Definitely people are going to be thinking about buying, not selling. On the other hand, and this is sort of like the counterpoint, there are a few things which are setting up that are a little bit scary. And you can see it in a lot of ways. I think like maybe the easiest way to see it is look at the premium of Bitcoin futures. It's up significantly. Bitcoin futures are now trading at like 5 to 40 basis point premiums, sort of varying in that range, which is definitely higher than the norm. And that certainly is a reflection of the bullishness. But it also means that there's probably a lot of people leveraged long. This is generally a sign that like, a lot of people are Forex long. And what that means is that if things do start going down, like the big worry here is that liquidations could start, and you could see cascading liquidation sell side. And again, just sort of like looking at futures premiums, at how futures are trading, there's like pretty compelling evidence that that people have some pretty big bets on, and that those could blow out. So I think like more likely bullish than bearish sentiment, but there's a lot of pent up air, hot air in the room, so to speak. I think when you're looking at altcoins, like, this is already the second time this year that they've had a huge burst. There's sort of like the brief altcoin season during DeFi season, where they went up a ton. They sort of lost some of their hot air, and now they're going up a lot again. I don't know for sure, but I sort of like feel like we're probably, if I had to guess, starting to reach the peak of that. And they're up 50 to 100%. That's a lot. And they could go up more, but at some point, I don't think it's new money entering buying them. Like, at some point, I think it's all speculation, and I think people are looking to flip out. And so at some point, I think there's sort of more short-term bets that will, be taken off either with a stop loss for profit or a liquidation, sort of one way or the other. And so I think that, like, to see a lot of further increase, I think alts are sort of waiting on something. They're waiting on big adoption by PayPal, or they're waiting on big use cases, or waiting on a lot of retail sentiment. And you're starting to see a little bit on Coinbase. Coinbase, Ripple, and Stellar today went kind of crazy, but again, we're talking a few million. We're talking like $5-10 million of inflows, which is not nothing, but it's not. That's not the sort of like $3 billion of inflows that you need to see things go really hockey stick up in alts.
So you're looking for huge amounts of inflows. That's what you're looking for. And
Yeah.
And you've touched on something that's very interesting, right? Leverage loans in this current environment. And I've been noticing quite a few like sudden drops, as if it's almost like some people trying to attempt to cause a cascading chain reaction.
Right.
Is that a thing? Like, do you see that on your exchange? Is that stuff that's going on where people just try to trigger some massive event?
It wouldn't shock me. It's always, it's often a little bit hard to tell because once things start trickling down, you start to get some liquidations, and then it sort of like has been triggered. And there's a question of like, why did it start going down? And the thing is that like at some points, all it takes is like a few percent, which is a sort of amount that like it sometimes moves anyway. And so it can make it like a little bit tough to figure out like, was this just a random natural move or not? And I don't think it's obvious often. I think that often it's sort of a little bit, it could be anything. Sometimes it's clear. Sometimes you'll see some things on an order book and it's like, that's not right. Like that is not a natural order. And I think that a lot of people posted some of these things on BitMEX from earlier this year.
So sometimes you see like that arrow, right? You see sudden drop, like, and then within the same hour, like it just moves. Like, so Bitcoin might move down, say like 1,000 within an hour, and then go all the way back up again. I mean, that doesn't look too natural to me, right?
It doesn't look natural. It looks really artificial. Although liquidations cause artificial looking things. Like if all that happened was it randomly went down 200, then liquidations drove it down another 800. Then the liquidations end. Some people are probably saying that 800 is stupid. No one actually thought it should go down more. It's just some people were forced to sell through a liquidation. And then they start buying it back up. You might even trigger some liquidations that side. Like it's, you can get these really momentum and then very moves just from forced liquidations without assuming anything manipulative. So I don't think that alone is enough to show it. But I do think that like sometimes you see things which are too sharp like that, even without a liquidation or before a liquidation. And I think that that's the sort of time when, like, there seemed like really weird moves that had at least weird, significant parts not driven by liquidations. That things start to seem like more suspicious.
Got it. And talking about the suspicion here, so a lot of people talk about the CME gap, right? So we have a lot of cryptocurrency derivatives exchanges and CME gap. So do you think that CME gap matters, or what's your take on that?
There's not. I basically think it doesn't really matter. I mean, I think it's a little bit of a self-fulfilling prophecy from people thinking it matters. I don't want to like say I'm confident it doesn't matter, but I would not bet on it. Like, I sort of think it's not what my prior would be. And I mean, frankly, you can come up with plausible arguments in both directions for it, right? Like, one argument is that it will gap up to where CME is, I guess. Another argument is that there's going to be sell side pressure on CME, which could trigger some things. I think that like more than anything else, though, like in order to predict a big effect there, I think you would want to predict that it was like a really big source of liquidity, that there's a lot of really natural liquidity on CME that doesn't exist elsewhere and that isn't drawing from prices elsewhere, right? That's actually where the buyers and sellers natively go.
But do you see that? Because we don't really see CME as one of the top derivatives exchanges. I mean,
that's right.
It's not even on the top 10, right? So,
right. And that's why I'm sort of skeptical of it. Is that like if it were Binance, if Binance were like closed 2 days a week and then reopened, I like totally could see stickiness to where it closed. From just a lot of people who had stale orders out, if nothing else. I think you're looking at CME and it's like most of the order starts market makers pricing it off of other crypto exchanges is not like, and so I think like, by and large, I wouldn't expect a ton of stickiness. That, with some exceptions, some days maybe you wake up and there's just some CME whale who's doing some weird shit. And like, as soon as CME
probably are institutions. Is that maybe why it matters more in that sense? Like, it's
I think they sort of have to be because. And they don't have to be, but CME in general is like a pretty institutional place to trade. Like it's, most retail don't trade on it, but for some institutions, it's sort of the only place they can get exposure.
So now we have the CME gap. So I think that kind of answers it, and that also kind of, I do agree with that in the sense that the volume on CME just it's not a scary volume. So the gap is not the biggest priority for me either. Now,
Yeah.
Speaking on exchanges, on your exchange side, I mean, I think there was one concern. I think a lot of people were a little bit concerned about trading about FTX because you kind of see the order books, right? So you have an exchange and you have a fund, right? And how do you kind of ensure that you don't trade against the customers on the exchange?
Yeah, totally. So I mean, the sort of like the Alameda traders don't have access to any special info there. It's just an account like any others there, and from the so that's sort of like the first thing I'll say is that the people actually actively managing the trading, on FTX don't have any access to FTX user information or orders or things like that beyond just public data feeds, and I think the other thing I'll say is that what's sort of the goal of FTX? What's the upside there? Like, really, the answer to that is that it's in FTX becoming a really big, important exchange, and that you can sort of look at the prominence that crypto exchanges have in the industry, and it's much more than you see for non-crypto exchanges in the rest of finance. Like, exchanges have just a really big place in this space, and generally that. That's the goal. That's where all the upside is in growing FTX as much as we can, and that anything that that I can do to help grow it is great. And anything that would hurt that would be really bad for the business. And so if you then circle back to what is the purpose of Alameda on FTX, above anything else, it's to provide liquidity. It's it's not to make money. It's because a thing that, and both generally being able to increase liquidity on an exchange makes it better to use, and above that, it gives a lot of sort of agility to the exchange because it just makes it a lot easier to list new products when that there's a super motivated liquidity provider who will kind of put in the work to get set up to provide liquidity in them. Whereas otherwise, you're sort of like, hey guys, we've got Dogecoin March futures coming out soon. Like, anyone want to be ready on day one to have liquid markets out? And it's like, fuck no, obviously not.
Yeah, just go away. Right? You just see a gap of 20%, and no, that doesn't work.
Exactly.
Okay, so we got a good question coming out from Troy. So Troy asked, what does Sam think about toxic trade or Wu trade mechanism? So we recently had talk with the guys from Wu trade, and they're classifying kind of market takers as toxic. What do you do the same thing? What do you think about that?
So I think what I'd say is speaking as sort of exchange perspective, I just want all the customers, and sort of the purpose of order books is to sort of let everyone express their opinions and trade with each other as they see fit or their models see fit, and that sort of promotes price discovery. Speaking as sort of from the trading side, how do I think about this? I think the biggest thing I'd say is different people have different strategies and different edges, and that what toxic means or profitable means or losing means depends a lot on that context. And so, if you're an HFT firm, right, then you're probably thinking about this on the sub 1 millisecond time scale often, or at least sub 1 second time scale. You're probably thinking about a toxic trade is one that's good marked to 1 second out, and a bad trade is one that's bad marked to market 1 second out. And so you have sort of your view of the set of trades. And if you're instead sort of someone who puts on deltas for a week, right, you're probably thinking a toxic trader is one who buys a lot of something that's going to go up tomorrow, or sells a lot of something that's going to go down tomorrow. And in general, there's sort of like two very different timescales, and they probably rely on two very different types of signals. One person is probably looking a lot at market microstructure and order books and data feeds, and another is probably looking a lot at chatter online or fundamentals or news or related products or something like that. And those two participants might not actually find each other toxic. They might find each other great, right? Because like the HFT firm might be like, great, there's this guy willing to pay 3 bips to do this trade. It's amazing. And like super non-toxic. And then the, longer timescale guy might be like, great, here's this firm willing to sell me millions of dollars of this thing that's going to double in the next week. Like super, super friendly order flow, right? And of course, like the HFT firm's like, sure, but I'm just hedging somewhere else. And the long timescale is like, sure, I'm paying a few bips, I'm going to make 1,000 of them tomorrow. So, and so in general, like what toxic means depends a lot on how you're thinking about trades and what trades you're thinking about doing. And, there's different timescales, there are just different triggers. And those really play a pretty large role in how, different types of order flow interact with each other.
So your solution is really to have as much diversity as possible rather than to tax particular types of strategies.
Exactly. And like, if you have nothing but one type of trader on there, it's a shitty exchange, right? Like you do nothing but you get like Litecoin maxis. That's like your entire goal is just get no one but people who think Litecoin's going
maybe
to.
it's a huge buy side, right?
Right. Exactly. $1,000. It's going to be shitty exchange. Just no, they're not going to be any offers. No one's going to be selling their Litecoin, right? Everyone's just going to be trying to buy Litecoin. And it doesn't work, right? And so like in general, the way that exchanges can work is, you have to get people who are, you have to get people who have different trading strategies, different beliefs, different models, different timescales, different something, so that they can find mutually beneficial trades. And rather than like trying to get to a point where like, each person thinks the other one's getting picked off and one of them's wrong, what you're really shooting for is to find win-win trades that fit both participants because they're employing different types of strategies.
Got it. Okay, so talking about strategies, and I think just switching gears a little bit, you recently added a lot of securities trading on FTX. And I would say initially my response to that was like, whoa, like what is this guy doing? That's extremely ballsy because it's literally the first exchange offering, like big exchange offering securities on the platform. So first of all, how does it work and how is this even possible?
Yeah. So we launched stock trading on FTX recently, which is pretty exciting. So you can trade Tesla there, you can trade SPY, and you can also trade quarterly futures with leverage on them. In terms of how this, in terms of how this came about, basically, the answer is we partnered with CMEC, which is a licensed German financial institution. Which has a license to offer this to their customers, and so basically partnered with them with their license and or it's called a tied agent from the perspective of German regulation for this, which basically means a party which is authorized to lean on that license, and there's some amount of co-KYC customers between us and them, and trade reporting and things like that. Which gives in turn FTX the right through this license to offer securities to customers. And we have to KYC the customers, like it has to be up to our standard level of KYC. We have to look for trade reporting on it. There are some limitations on what we can do and what products we can offer. And there's limitations on the extent to which we can allow these to become tokenized and move around the world, because that might break out of this sort of like KYC walled garden. But modular that, it's a thing that we can do. And I think it's really exciting because it's sort of an obvious step forward for crypto of being able to merge different types of products in one venue. And crypto exchanges are actually just like a really nice venue for trading other things, including equities, because FTX, it already has a ton of fiat on-ramps and off-ramps. It already has a matching engine, a risk engine, already has liquidity, has customers. GUIs, mobile apps. Like it already has a lot of the pieces that you need to build a good stock exchange. And so it's a really kind of natural addition. And uh, and so, I think that's like one of the reasons I'm really excited. Is not just I think it's a cool business, but that it's a really nice fit.
So does that mean the markets are open all the time too? I mean, because the problem with stock markets is that they're closed half the time, right? Especially
that's right.
If that's the case, so the markets, so I mean, crypto we're used to 24-hour trading. I think it's quite nasty, but it's great for some people. It's great, not great for some people. Sometimes
it's nasty for the people running the businesses, but it's pretty convenient for the people using them.
That's a great way to put it. Okay, so what happens if there's a gap though? Like, let's say something trades crazily throughout the night, but the markets aren't open. So when the markets do open, what happens if there's a gap there?
Yep, there could be a gap. I mean, it's, there's some very liquid pre-open trading. And so like you might start to see indications of this before the open, but you might not. Like there's a lot of price discovery that happens right when markets open at, 9:30 Eastern. And so, you should basically just expect a ton of volatility in stocks right at, that's 10:30 p.m. Hong Kong time. And then on the flip side at 5 a.m. Hong Kong time, which is when markets close. Certainly like you should like watch your risk exposure around then. As soon as markets are open, you sort of like strongly expect that the FTX markets will snap roughly into line with what they look like. Otherwise, there's sort of an arbitrage to do. But before then, things might just be super liquid. And so it might be hard for anyone, let alone sort of like random liquidity providers on FTX to figure out what the fair price is for the equities.
Got it. So there are arbitrage. I mean, I'm sure someone does arbitrage between exchanges, right? When it opens or not. So that kind of makes sense. So do you see a lot less volume during the non-trading hours versus the trading hours?
Oh, yeah. You still see a lot less volume, and it's sort of unclear. Like to some extent, I expect this to stay. To some extent, I think it's less clear, and you could just see a new paradigm opening up where people get used to being able to trade stocks during non-traditional hours, which would be pretty cool. But I can say that like we see 10 times as much volume on weekdays as weekends for the stocks. So,
got it. I think maybe because of the market, but I would say this is probably the primary use case, right? To allow people to trade stocks.
Yeah, it's one of the big ones, getting 24/7 access, also getting easy access to leverage products on them. And
how does it work? Like the leverage products, is it kind of like the crypto style where you have this kind of funding fee rate, or how does that work on FTX
So how does the funding for
the futures, like how do futures for stocks work? Do they work on funding fees? Is that the same fee?
Right. So the thing that we have right now, it's a quarterly future. So there's no funding fees, and instead there's a cash expiration. But you could do perpetuals instead. That will work as well. And the basic answer is that right now they use the FTX spot market as the index. And so, the Tesla 1225 quarterly future expires on December 25th to whatever price the spot Tesla USD order book on FTX is trading at.
Got it. Okay, so that leads to the last question on the stocks thing, which is like, what happens if there's manipulation towards the end? I mean, if it's about to expire, right? And the FTX order books, if it's based on the FTX order books and the FTX
then what happens if they're out of line? Yeah. So it's actually based on like a 1 hour TWAP, not on a single snap point. So it makes it a little bit more resilient. At least it can't just be like a single random print. Outside of that, sort of the answer is that theoretically, like liquidity providers should keep that in mind because, if it starts running way up, if the spot market starts trading or easier even is way down, at like 10% the price of like the actual stock, then like you just go in there and start buying on that spot market. Like it's an amazing trade. You're doing like a trade good by 90%. And so theoretically, arbitrage should keep this in line with like the global fair. Now, that sort of does rely on there being actual people ready to do that, ready to do that arbitrage and ready to do it in big enough size. And so then the thing that I would say is like, what's important for the health of the market is that there's as much sort of like liquidity ready to trade during expiration as there is expiring size in the futures. And if the futures get bigger than the
So it's like
the
shoveling between the two sides, right? So if someone tried to manipulate it, it'll be an amazing arbitrage opportunity for that 1 hour.
Exactly,
where
and they'll kind of like lose that battle, right? Like
Right.
as they try and do that, like they'll just get outweighed by the people doing the arbitrage against them, and they'll just net lose money trying to do it, you know. And so that, and you know, if you're someone who has an expiring future, you can always just go and buy the stock if it's trading really cheap. You know, turn your futures position into stock. So theoretically, it's okay if the liquidity ready to do that arbitrage during expiration is at least a match for the size expiring in the futures.
Got it. And last question on this whole stock stuff. Like, so, I mean, there's a lot of options out there for trading stocks. I mean, we saw kind of Robinhood, pop up in popularity, exposing a lot of people to it. Kind of, how do you see this grow? Like, how do you see this market? Like, where do you see this going? Do you think this is for crypto people, or do you think you want to bring more audiences onto the securities trading?
It's a good question. So, like, the most natural audience is the crypto people, obviously, because that's sort of the existing audience. But in the end, I think this is going to have a lot to offer to a lot of people. I think that it's, if you compare this to, I think some people have access to really good ways to trade stocks. I think a lot of people don't, especially stocks from various countries. Like for a lot of people, like having a stock brokerage platform that charges like small fees, that's 24/7, that they can get 100x leverage on, that has like fiat and credit card on-ramps and off-ramps, that also has crypto on-ramps and off-ramps, that has, real-time order books and mobile apps. Like that's sort of like a set of things that most like retail stock brokerage platforms don't have. And I'm not saying none of them will have it. And I think that there are some people who don't need this. Some people have good setups already, but I think there are a lot of people whose current ways to trade stocks are missing like a lot of that, are just like quite a bit shittier. And so that's probably the biggest thing. Then another thing is that, if you are also interested in trading crypto, this means you only have to have one account, one login that you're like used to trading in one place. It's easy to go back and forth, and you can also use them as margin for each other. So you can buy stocks and use them as collateral for your crypto futures trading on FTX, and you can buy crypto and use it as collateral for your stocks futures trading on FTX. They're all cross-margined with each other. And so that's another perk if you're interested both in trading stocks and in trading crypto.
Oh, that's such an interesting way to look at it. That's true. So your account, you use account leverage or that, or sub account leverage, and then
exactly. And so you could have an NVIDIA spot position powering your Litecoin short or whatever.
Got it. Okay. So, that's extremely powerful, but it sounds also extremely dangerous. I mean, if like a Litecoin short, you can just wipe out your NVIDIA position too, right? I mean, depends on it's and I think that's an issue with crypto trading, right? Like all these tools give people a lot of power, and people need to learn how to use it correctly. And I think do you have any tips for that? Like, how should people kind of protect themselves from, getting back on this,
Yeah, I mean, there's sort of like the first step of like make sure you're doing trades you actually want to do, and like not just doing random trades. But once you're there, once you do have a trade you want to do, the next thing that I would say is like, think about what your realistic max loss is. Think about like what would happen if there is a big move. How much would you lose from that, and how would you feel if that happened? And if you're ever like 5x leveraged, it's sort of hard to argue that there isn't a realistic move that could blow out your account. Like, I mean, maybe if it's a Bitcoin powering a Bitcoin future short, you're looking better. But like, anything other than that, right? Like whether it's stocks, whether it's crypto or whatever, it could happen. And so, you should just think like, what's my max loss? If I'm using reasonable amounts of leverage, like probably it's that whole account or sub account. And like, would I feel basically okay if that happened, or would I be really sad? If I'd be really sad, then either don't put it on that big, have more, or have, stop losses or something to protect yourself against, that size of loss.
Got it. And I think you kind of walked yourself into this one because you talked about like 100x leverage. Okay. Who can correctly use 100x leverage? I mean,
I don't know. It's like people don't use it much on FTX because there is an option. Like, frankly, like very few people go above 20x. And, it's like it's been very popular, obviously, on BitMEX for a while. I suspect some people are doing it on Binance right now, given just the like frequency of liquidations there. It's I don't think it's exactly FTX's like historical most common clientele. Like FTX tends to attract people who use like 3x leverage as opposed to 100. It sort of doesn't have the reputation as the exchange that you go to get liquidated in the way that like BitMEX does. But I don't want to necessarily say there's never.
There, guys.
I mean, I don't know. It's good business for them, and I don't know. I don't want to necessarily say there's never a case for it, right? Like I think some people sort of see it as a natural stop loss of like, whatever. Like I'll put $100 in there and get really long. Maybe I make a lot. Worst case, I lose 100. I'm not endorsing that, but necessarily. But I think that like I don't know. I mean, it's a lot. And like anytime you start getting anywhere close to that, like you should really be thinking that there's like upwards of 50% chance you're going to lose it all. And that, the trade has to justify that.
Got it. And also just set the parameters properly. So we got a funny comment from Omar Farouk. By chance says, did Sam just short 3.7 million BTC? I guess that was a joke or something.
I did not know, but someone might have. I don't know. If so, it wasn't me.
Just looking around. All right, got it. All right, so talking a little bit about the whole crypto thing again, and you were very big into the whole DeFi craze during the summer. Are you still very big on decentralized finance? What's your take right now?
Yeah, I sort of am, but in a somewhat selective sense, in that like I think that a lot of DeFi has sort of like failed to keep building in a productive way, and I think that it's sort of like stuck in a little bit of a rut in terms of product. I think it's going to start to show. And I think that like there's a lot of reasons for this. One of which, frankly, is that like when you're in too much of a bull market, do you think we might be right now? It's like just too easy for some people to list a token and make money from it. And just sort of like, where is the incentive to build a great protocol instead of like listing a token with a great ticker? But I think the other problem is that like people are just super constrained right now, and Ethereum's a lot of that. Like Ethereum does not have the throughput to allow you to build powerful applications on chain. If you think about almost any real business in the world, like kind of large business, and you're like, hey, would you like to build on chain? Also, anytime someone clicks a button, it'll cost $1, and your entire business is going to get, about one action every 30 seconds. Most businesses are going to be like, no, like, or at least most large businesses will say no, like, I don't want to do that.
Well, obviously we're in this like weird state. I mean, gas prices are shooting above 100 again. Yes, it does cost not just $1. I think
sometimes many dollars, right?
Many dollars, and contract interactions cost like $10-$20, right? But Ethereum 2.0 is coming out. We see more money flowing in. I think today we saw the launch almost set, right? So ETH 2.0 is coming out, and then there's also like the kind of the midway solutions as well to that with kind of like
with like layer 2.
Yep. So do you think that's going to solve it, or are you like fully onto the Solana bandwagon?
I'm pretty bearish on it, and the reason, well, to be clear, not necessarily on prices. Like it's sort of like coins can go up no matter what. I'm bullish on this solving scaling and bearish, sorry, on it, and the reason basically is that it's so ETH 2.0, like step 0 of it is coming out very soon.
Yeah, we actually passed it. So I just confirmed. Yeah, we actually did pass it. So congrats to ETH. Yeah, so we actually made the 550,000 ETH stage. And so the threshold for the mainnet launch has been completed. Wow, they did like 50% in a day. I mean,
it's pretty impressive.
Like I saw,
and maybe actually related to the ETH run up. Like maybe what's going on is everyone's buying ETH to lock it up. That would be plausible.
And lock it up and throw it away the key for 2 years.
Right. And that's where you start to see the problem is that like this isn't the actual full launch of like the new world of Ethereum. This really is just like step 0. And among other things, like transfers aren't enabled, and it's going to be a very long time before they're enabled.
I actually thought transfers would be enabled and exchanges can do arbitrage, but no, like no transfers.
No, there's nothing. You can't even move ETH2, let alone like tokens on the network. So it's not like ETH2 is not here in the sense that it can like help support DeFi applications, and it's going to be years probably before it's like actually fully live. So at the very least, it's not going to solve the problem for like 1 to 5 years or something. And when it does, it's not going to be, it's still not going to be the fastest chain. I mean, it's at least, and this depends on what you think of sharding and how well you think sharding is going to preserve what's important to DeFi. But single shard throughput on ETH 2.0 is not going to be super high. Like most of what it's doing is just parallelizing via sharding. And the problem with that is it breaks composability. Like things on different shards are not really composable with each other. And so it limits what like one sub ecosystem, how big that can be to like sort of similar restrictions to what we're seeing. And so I think that like it's going to take a while and still not be the best solution to it. And then you can get, layer 2s, but they have sort of similar looking problems in that they're, the different layer 2s and different chains of the layer 2s are not composable with each other. And so you end up with a lot of sort of like sub ecosystems, each of which has, lesser security guarantees, but also not like just sort of like, one application running on it, which then can't compose with anything else in the ecosystem. So it's sort of another like half measure, like another thing which will like help with scaling, but at a pretty big cost. And, I sort of think that like that's going to be, it sort of backed itself into, I think just like not that exciting of like a plan for a lot of sort of like ambitious applications or ecosystems or businesses looking at blockchains. And so I think that like there's still like going to be really compelling reasons to build on sort of like natively faster chain.
Got it. So I think, so just to give you some context and history for this guy, we talked a lot about Solana, and I actually grilled Sam very hard about, why he built Serum on Solana, right? So I think we'll leave that to another time because I think that goes really deep, and we need to discuss ideas like composability and kind of a little bit in depth. But speaking on the kind of the general level of DeFi right now, right? So you pointed out a few issues, right? So you feel it feels like you're quite cautious about DeFi. So you're pointing out scalability and building products. But are you still aggressively invested in DeFi? What's your kind of take? Are you?
Yeah, I'm not super aggressively investing in DeFi in general. I think most of the investments right now are in Serum-based, DeFi systems, on Solana-based DeFi systems, and I am doing a lot right now to try and help along projects that are building, with Serum, that are whether it's sort of grants or investments or advice or matchmaking or what. And because I think that like one of the really key things to whether Serum succeeds as an ecosystem is whether there is much of an ecosystem there, both from the user perspective, but also from the application perspective. And so I'm spending a bunch of time working on that. But outside of that, not doing a ton on DeFi right now. Not that it's not sort of a hard moratorium on it, but I think like the standard that I'm holding it to is like, it has to be an actually exciting product, something that looks new and looks like it's going to be actually useful as it is. The vast majority of DeFi projects do not meet that threshold.
Got it. And we saw a few trends, right? So over the summer, we saw DeFi, it just shot up like crazy. I mean, Wi-Fi just like came and just like, it said hi to the world, right? And then obviously there was, some pullbacks, especially with a lot of the coins that were kind of had early investors, I would say. And then those early investors dump, looking at you, Singapore. But okay, so we had DeFi going there. And then we had the whole NFT craze. Which one would you say has more legs, like the whole DeFi craze or the NFT craze?
Definitely DeFi. I mean, NFTs are, I don't want to say they're never going to be useful because I think there are exciting things you could potentially do with them. But like, I think DeFi got closer to that than NFTs did. Yeah. Like, I don't think DeFi,
NFTs, the thing that baffled me was like all of a sudden we had all the DeFi kids become art critics,
Right. Exactly. It's like, at least with like DeFi, people were like trying to build facsimiles of like financial infrastructure, and they were kind of like, some of them were useful. They had a lot of problems, but like, it's like, okay, that's a product, like with the NFTs, it's sort of like everyone convinced themselves for a month that they were going to care about NFTs. And like people put in a ton of mental work to get themselves on board with NFTs being a thing they should be thinking about.
Yeah. Yeah. I don't want to fund NFTs, but I felt like some of the art prices were just a little bit ridiculous. Like I was like, whoa, that's like a really expensive price.
Oh yeah, it's totally ridiculous. I mean, and that's the thing is that like, if you're going to do NFTs, like there's sort of a right way to do it. And the right way to do it is like, you start by like having a thing that needs an NFT and then you make an NFT for it, but like the whole thing of like diving into NFTs without starting with anything that needed an NFT, it was sort of like it was sort of backwards. Like it was like, creating an NFT exchange and then like you have nothing to list on it. And so you just like spend 5 minutes making something in Microsoft Paint. And
brutality, shots fired.
That's not going to get you there. It reminds me a lot of the previous like security token crazes, where people would put a lot of work into like, listing security tokens, and creating security token exchanges and getting the security token licenses. But like, they didn't first try and figure out what security tokens there's demand to trade, right? And so they're just like, there's all this talk about it, but like, I don't know, did any security token exchange ever go anywhere?
Well, maybe people were interested in Swiss property.
Yeah, maybe, right? They didn't get around to getting the Swiss property on it, but I mean, who knows? Maybe people will be. Again, it's just this thing of like, first start with like the need and the product that people want, and then figure out what infrastructure you need to get there.
Makes sense. All right, so that's talking about there. So I think we're close to an hour now, so I kind of want to slowly wrap this up, and we'll take a few questions from the audience because that would be great. But my last concern, all right. So you have both, right? So now you're working actively on FTX. We see the FTX logo behind you, and then we have Serum, which is a decentralized version of that. So why? I mean, I think I kind of touched upon this, but like, why? You have a centralized one, you have a decentralized one. Like how is this going to work? And do you think decentralized is the way for the future?
It's a good question, and I mean, I think there's sort of like a question about what the right thing to do with DeFi was, and in the end, sort of what we decided was that like building sort of like the FTX DEX was not going to be the exciting version of that. And the reason is that like FTX is not decentralized, like it's just not, and so what would it mean for it to be the FTX DEX if the whole point was that it was going to be decentralized, but FTX wasn't decentralized? And so I think that like from that perspective, like we sort of felt like that was kind of silly and half-assing it, and that like if you wanted to do DeFi right, it meant taking it on its own terms, and building the thing that makes sense in its context, and that's what Serum was meant to be. And it's totally separate from FTX, and I think like is super excited to partner with anyone, including other exchanges. I
guess that's where the ecosystem fits in, right? So if you have the ecosystem tapping into the whole DeFi scene, I mean, that's where the power can come from, I guess.
Exactly, and that's the other thing is that like if it's just like us building applications on, that's kind of lame. Like I think that's not the super exciting version. Although obviously some of that might be needed to kickstart it. But the super exciting version is when you get a lot of people to buy in it and a lot of people start building on it and start using it and start, turning it into the world that they want to see. And I think that like, that's what's super exciting. And I think that like, it fills a different niche than FTX does. And, I sort of don't think either is going to go away. I think that they both have their uses. I don't know what, I don't know. Who knows which is going to end up doing better or what in the long term, but I think that like they both have really exciting and separate, although in some senses similar upside.
Got it. And I think the translation here is like, guys, build on FTX. Get people to build on get people to build on Serum. And
exactly.
Build an ecosystem. That's
fucking willing to pay for it. I mean, we've given out millions of dollars in grants for people building on it. We're like happy to provide a lot of advice, a lot of documents, a lot of like really willing to do a lot there to try and help people do it. And, I think it could be very lucrative for you as well if you're interested. Like it's, I think it's a pretty fertile ground to start building on. And if you want to launch a token on it, like great, that'd be super exciting. And we're in fact happy to help. And in fact, people have built a lot of tools to help that. And so I think that like, I'm, just really excited for that to happen. And I think more so than anything else, not so much excited for like half-assed projects, like really excited for people to
legit project.
Take something by the horns.
So if you can impress Sam, basically what he's saying is if you can impress him, he'll give you millions of dollars. So
sure,
take that. There we go.
Why not?
All right, moving on. We have Clement If, so tokenized SBF net worth. Would you be willing to do that?
Oh God, I mean, it's it's too messy. I'll fucking create an ETF with some Serum and FTT in it. I think that's the easier way to do it.
Got it. All right. We're just looking for the comments here. So, Vitalik versus Sam chess match next time.
Oh boy,
that would be fun. That would actually be fun. We got Crypto Graham saying, Sam, did you look at the Pickle attack vector? Do you have any thoughts? I mean, Pickle was a big catastrophe. I haven't looked at
the attack vector there. It's I don't know if you happen to know off the top of your head what it is. I don't.
I read the post. It basically said, we changed a few lines of code from Yearn, and those lines of code blew us up. I'm like, wow, you should have changed those lines of code.
I mean, do you know what they were targeting? Like, is it another Oracle attack, or is it something else?
It's not an Oracle attack. It's based on the way they pass between the jars. So like they have these vaults, and based on how they pass value between the vaults, I think you have to look at it. They wrote an explanation. It's basically they admitted to changing the Yearn vaults code, and then they admitted to having major design flaws between how they pass value, and then they screwed up. So it's $20 million.
Totally hear you. That looks pretty embarrassing. I think this also gets to like, people talk about audits a lot, and I don't want to shit on audits particularly, but like I think that it sort of like has oversimplified what matters here, and that it sort of like has turned into this binary, like, is it audited? Is it not audited? And like, frankly, like, I know if Pickle was audited, then they changed something, but like no one's ever going to update something, get a re-audit with every single line of code change. I mean, it'd just be like, getting audits every day. Like they take longer to complete than that. So, and so I think that like a lot of what at least I look at here is like, have a lot of smart people thought about this and looked through the code and used the protocol and been like, yeah, this works, versus like, are people like, look, I got no clue what the fuck is going on here. Like, I don't know. It's got some jar shit. And it's fine. Some people say that, but like, are there people who are like, yeah, like I've, I know my shit here, and like I've looked through this and this works, and not just like I've looked through this and it looks like it probably works, but like I've thought hard about this,
I think that's the biggest issue, because during the DeFi craze, everyone was just pushing to launch products, right? I mean, it was just like, oh yeah, we spent like 6 hours. It seems to be about long enough. I mean, DeFi, we got to rush this token out, right?
Oh yeah, exactly. And I think that there's a lot of like silent shift of goalposts where at the beginning, people were terrified of Compound and Balancer. They're like, oh God, DeFi risk. Like you put money on those, who knows what'll happen? And like, we are sort of like, that's silly. Like, look, we've read through the code. A lot of smart people read through this code. It works. Like, it's like, this definitely works. And then it sort of got to phase 2, which is sort of like the sushi phase of like, all right, some people have read through this code. Not that many. Hasn't been around that long. What it's doing is not that complicated. People are pretty sure it works. And we're like, yeah, okay, I agree. This works. And that phase was like sketchier, but you can still get away with it if you're careful. But then it got to sort of phase 3, which was like, I heard there was a new protocol. This might be the website. I'm not sure. Should we try putting money in it? And that was the phase at which like you lose. You're just going on heuristics there, and like, sure, I mean, do it if you think it's the right thing to do, but like you sure as hell better be aware that you might lose that money.
And I think so. I mean, I think even from the retail perspective, I mean, like there was like Farm with this weird guy, Chad. People were investing just because of
Right.
that logo, right?
Oh
It's
yeah,
like
no, exactly.
it's I mean, ape was popular. Do you ape? This term because like I think the
Right.
reasoning behind it is because people ape into projects. Projects want to make a product ASAP with some sort of good branding.
Oh,
And
it
then
makes total sense. Like it's like, you're not, if you're making the project, you're not on the hook for lost funds. But you are on the receiving side of people buying your token. So the incentives are clear.
yeah. So do you think how okay so how do we make it more sustainable? Is it the only way if there's going to be, because I do feel like there will be a second sort of run somehow, because I mean we saw the altcoin resurrection. I think DeFi is going to come back, but can we make it better, or are we perpetually trapped in the circle of hype and
I mean we can make it better.
projects?
It depends on what people are using as their signals, and like if you're using as your signal like hyperinflating token that I read about on Twitter once, it's not going to get better probably. Like that's just going to be what it is. But if you use like a moderately better heuristic, it totally could be. And so I think that like using heuristics, like is there a real team behind this that I trust will do things right? Do they know what they're doing? Like
but then the argument during the whole DeFi phase was like, do you want to make money, or do you want to get? Do you want?
Absolutely.
Do you want to make money?
Right. But
I was like,
I totally hear you, and I think the big thing there was like a lot of people were being kind of like really unreasonably scared of some protocols, and I think like Compound was probably like a big example. But I think frankly Sushi counted. Like, I think that like Sushi was pretty clearly safe, despite having a lot of sketchy signs, right? Despite having like anonymous founders and things like that. It's just like it's not that complicated.
Well, there's a migrator clause. There's like a 2 day. Okay, it's a 2 day lock on a migrator clause, but
right. But that's something.
Okay.
Like and it's just like the other things. It just didn't have the super scary shit, right? Like it didn't have like reliance on oracles. It didn't have really complex 7-part transactions that of a type that no one had tried to do before. It didn't have like random delegation of critical, custodying all of the funds functions, but the other thing is just like a bunch of smart people had read through it and like not found significant bugs. And so I think
do you read through the code? Do you personally read through it, or do you get someone?
I don't personally, but we have people on our team who do. And so I think like there's a lot of signs there that it was probably pretty safe. Obviously not safe in all respects, and like as we saw, like team selling the token, not safe from that. But even that, I think is like a very different sort of thing, right? Like that's like obviously you buy a token, you're accepting the risk that people are going to sell it. Like, and it wasn't like they like
contractor. Yeah.
Exactly. It's not like they minted infinity of the token and sold it all, crashing it to like a tenth of a penny. It was sort of like an amount that totally could reasonably have been sold. And so I think like a lot of people were, I think, just being like really unreasonably scared of that. But on the flip side, that's just a really different statement from like this thing you've never heard of, that like no one's ever read through, is doing some wacky new shit, and like blindly trusting that and not being worried about downside from that. And so I think that like, this sort of like, yeah, but like, are you gonna make money if you do this? And like, come on, like, use your common sense here. Think about this, like use the evidence you have and make an informed decision, and like, do the best you can on that. And I think that like, a lot of people sort of had a somewhat dogmatic thing of like, everything is scary, or like, I'm going to ape into everything. And I think that like, clearly the answer is like, nah, think about each thing and think about how scary that thing in particular is.
I mean, that makes sense. That absolutely makes sense. And I think we just need to be better at it. I think I think ape became too popular. I also went a phase when when everyone was aping, I was like, you know what? I'm gonna just pull back a little bit. Let me not touch like the new farms that are out. It was kind of scary. I mean, I talked to the guys at Harvest a little bit, and like, sure, they kind of know what they're doing, but the systems were insanely complicated, and that was the issue, right? Like, there's so many moving parts, and I think there's the same thing with Pickle. There's just so many moving parts. And
totally agree. You look at something like that, and like, if you look at Wi-Fi, and you're like, look, I can't prove this is going to be fine. Like I could if I spent a lot of time on it, but there's just a lot going on there. It's like, I don't know, it's at work, hopefully. And like, frankly, I think the Serum DEX is very much like that. Like, there's so much going on in that thing. Theoretically, it's simple. It's like an on-chain order book, but there's so many fiddly bits to get it to work. that like realistically speaking, you're like a random person, you're not going to be able to read and be like, yeah, that works, right? There's just like all these lines of code which are like, you're like, why the fuck is this? And it's like, well, to stop someone from causing a buffer overflow by like saying an offer size of 30 bajillion and thus breaking all the funds in the order book. Like, obviously that's what we need. And so I think like that's the sort of thing where like, that took like weeks of time just to iron out and get to the point where we were confident that it worked and that there wasn't, critical bugs in it, and tons of like moderately sophisticated techniques of stress testing and pen testing it, because and sort of multiple really smart people reading through all of it before we could become comfortable with it. And so I think like anything that looks kind of complicated like that and was clearly thrown together on the fly by like random people, like, I don't know, maybe it works.
And I think like on that note as well, I think people don't understand how complicated it is. I think you just highlighted one of the big issues where if it's a centralized exchange and any bug like that would be like, yeah, whatever, right? We'll just freeze the withdrawals
exactly.
and then
right, like,
and that's fine.
With FTX, we're not like, oh God, what if someone tries to send an order for size 3 bajillion? Does everyone lose all their money? We're like, no, obviously probably they get an error, and if not, like whatever, like the exchange halts once because it's like, okay, yeah, obviously we need like some sanity checking out order size, and we put that in and start things back up again. It's not great, but like it's not the end of the world. But yeah, if it's an on-chain DEX, you can't do anything. You're just fucked. Like you can't change it. So like
pretty much,
if there's anything that doesn't work perfectly, it's just like, yeah.
Yeah, I mean it's a code problem, right? And that's the thing.
Yeah.
Like you're not gonna, and I think that's a phase we're at in DeFi where the risks come in. The risks are here because if hackers can get around major flaws in the code, there's no way to really reverse it. I mean, we've seen that happen once on ETH with the DAO hack. I think that was just a one-time.
I mean that's a really expensive button to have to press.
Yeah, that was pretty nasty. So I think that's pretty much the state we're at. So I think summary on DeFi is that you're much more cautious on DeFi. You're looking for good products, and if people want, it's generally careful. All right, I think that's pretty much it for today's talk. I got just doing Q&A, so we'll do like 2 minutes of QA. So I'll just look up on this stuff, and we'll do 2 minutes of Q&A when we wrap up the session. Sounds good?
Yep. Sounds good.
Okay, so we got a quick question. So thoughts. This is my Sam thoughts on Avex Avalanche.
Yeah, I mean, I think it's like they're a legit team. They're doing legit things, and I think they're building a legit chain. And like that doesn't guarantee that it's going to get big. I mean, who knows what's going to happen? And I think like a lot of that's going to depend on can they successfully attract a big ecosystem and users and things like that. The one thing that I will say is I think like it's one of the chains that people take seriously from like a technical perspective of like, yes, this chain is actually adding something to the ecosystem. And like, if this happened to be the chain that won for whatever reason, like, that wouldn't be shocking. That wouldn't be like, and it wouldn't be like a calamity. Like, no, it has some cool things going for it technologically.
Got it. Okay, so we got Adrian Crypto says, why did Sam invest in Trust Token?
So it's it's a long story here. I don't want to go into all of it, but basically, we've known the Trust Token team for a very long time, and Alameda has been a liquidity provider for TUSD for a very long time, and so I think that like a lot of this is like as a result of sort of like long-standing collaboration between us, and I think this is frankly true between Alameda and a lot of stablecoins. Like it's Alameda is sort of as a global crypto liquidity provider. Like stablecoins are one of the central things in crypto and a really important thing to be providing liquidity in.
Got it. All right, cool. So it makes sense if you know them for a long time. All right, we've got Alpha Leak, please. Says Cactus Cooler. Any Alpha Leaks?
Oh, geez. I mean, I don't know. Like, if you got money lying around, you're not doing anything with it, you do some ARBs at least right now. Certainly make like a good 10 bips a day just on funding, if that's what you feel like. It's not the biggest alpha ever, but
it's not bad, yeah.
It's something.
It's something. All right. Okay. So there's someone complaining about interface. So there's Mondo UX says, as people often talk about managing. Oh shit! Wait. Let me just read this. So, as people often talk about managing risk on losing trades, how do you manage risk on winning trades? So know when to bet or hedge and exit completely.
Yeah, it's a good question, and I think that like Alex Weiss had I think an interesting post on this and some other random crap the other day, but part of the conclusion of it was like, if you win from a trade, you have your position on, you've made your P&L, and it almost doesn't matter what point you entered at. It's a new day. And now you should ask yourself, do I still want this position? Is it still good here? Like, if you don't want any more, then close it down. If you're like, no, I still think it's going to go up more, like, I would want to put on position right here. If I'd never traded this before, then you keep it.
That's actually a good way to look at it. I was reading the tweet yesterday. I forgot who it was from, but it was basically talking about looking at positions rather than wins or losses. And I think that's kind of core.
Yeah, exactly.
Absolutely. Okay, so we got a few questions. Okay, so I'll give one last question. So guys, and by the way, guys, thank you guys so much for asking questions and stuff and making this super interactive. Really appreciate this community. Okay, so what do you think? Okay, so I think this is being repeated, but I'll just ask this. Fei Huang says, what do you think of ETH short-term price after staking is done? So we're nearing the end of stake now. So are you so bearish or bullish, or in the middle?
I don't know about price action. I mean, short-term price action, who knows? And there could be a sell-side liquidity crisis. I think it's sort of like weird price action right now, maybe a little like not long-term or artificial, but like that doesn't mean it's necessarily going to revert. And and I think that like in particular, like, staking for some things does increase price. And I think like this might be an example of that, where it sort of like caused a lot of supply to go away because a bunch of people locked theirs up.
Got it. And okay, last one. Okay, this one's cool. Okay, Sam, what does your portfolio look like? Do you have like a portfolio that you write down somewhere, or do you have a wallet we can track?
Oh boy. Yeah, here, I'll give you guys I'll just paste the secret key into no. It's I don't know. I mean, it looks like what you think. So, I mean, I think the Block published a piece on Alameda's portfolio actually somewhere recently. The portfolio is just like list of things Alameda had invested in. This is a bunch of crap. I mean, it's there's a lot of things there that's going to be pretty confusing. But like, I don't know, you probably guessed like the biggest things in it, right? Like, I don't think that like numbers 1 through 3 are going to be very shocking to people. So.
Got it. Got it. All right. I think that's pretty much it, guys. So thank you guys so much for tuning in. Smash up the likes. Check out Sam's Twitter. Do you have anything you want people to check out as we end this?
I mean, in general, FTX or Serum, like, if you're looking for a centralized exchange, we'd love to have you on FTX, building new shit every day, and love to have your feedback and know what would make it the best place for you. And if you're looking for a decentralized ecosystem to trade on, I think Serum's pretty cool. I think it has by far the best, on-chain order book in the world. And if you're looking to build in DeFi, would really love to have you building on, building on Serum. And so I think, join the Serum Discord and throw out your ideas or find other people to work with.
Got it. Cool. So thank you guys. You heard that from the big man. And I do have a FTX referral code down there if you guys are interested. This was definitely not to promote FTX, but if you guys are joining anyways, I mean, go ahead, join FTX with the code down below. Also, big shout outs. It's Black Friday this week. So ledgers are cheap. So you can snag one of these Ledger Nano X's up for 40% discount. I'll put a link down below as well. So that's my final show for the day. And guys, thank you guys so much for watching today's episode. I hope, hope Sammy can come back for more. And this was definitely a very entertaining episode. So cheers. That was great. So guys, thank you guys so much for watching. Let me do the outro and we are good. I'd like to take the time now to tell you a little bit about everything that's happening in the box mining ecosystem. First and foremost, if you guys like listening to all that's happening in crypto on the go, then I would highly recommend you checking out the Box Mining Bitcoin Out of the Box podcast. And the reason why it's called Bitcoin Out of the Box is because we have long interview segments very much exploring the detail of the newest and latest of what's going on in this whole cryptocurrency space. Whole idea of it is to bridge that gap between privileged institutional investors and the rest of us here in this space. Now, with the podcast, it's on everything. So it's on Apple Podcasts, it's on Google Podcasts, it's on Spotify. Just search it anywhere, Bitcoin Out of the Box. So just add that onto a playlist and let's just follow the new episodes when it's released. Next up, we also have the Box Mining newsletter. So this happens roughly bi-weekly. We give you an update of the latest that's going on in a very summarized, condensed format. So this is perfect for anyone that wants an overview of the market. Say, for example, what's happening with OKX, the biggest event, or maybe the little things like what's happening with different coins and overall the trend. So what I use the newsletter for personally myself is to understand what kind of phase we're in crypto, to kind of get in tune. So if you don't read crypto every day, the newsletter is perfect for you. Last but not least, in the link down below, if you're a Telegram user, we have the box mining announcements channel. So this is to announce to you basically what's the latest videos coming up. But also we have a daily update, a community-driven daily update to provide you an idea of the latest updates on the day. And a lot of people have been using that to get informed of the crazy amounts of trends that we see. And I have to give a big thank you for Claudio, our community member, for doing this. It's just been phenomenal. Definitely want to give you a shout out there, Claudio, as well for that. And taking us to the end of the live stream, so make sure, number one, you click like and subscribe on this video because it really does help this channel. And then, of course, check out the podcast. It's one of the best ways to know a little bit more, to extend that knowledge, especially in your spare time. And then, of course, check out the newsletter. If you're, if you want those updates and summaries and trends, newsletter is the place for you. And with that, guys, thank you so much for watching this video. I really hope you have a good one. See you in the next video.